So you have a dream property and you want to set up a glamping operation, but you want to do it right. Taxes, tax forms. You're going to be making a lot of money, but how do you manage all of that? And how do you protect your assets from anything going wrong? I used to think that stuff was cumbersome and complicated, but not anymore. And that's today's video. Hey, I'm Jeub, the Glamping Guy, and this video is actually a cut from our weekly tribe session, or mostly weekly tribe session, where I get together with other people from across the country, even the world, and we discuss our glamping operations and what we got going on in our own private properties. Be sure to sign up for the next one at glampingguy.com/tribe. We'll be meeting together and talking shop about glamping, and I want you to be there to contribute. In this tribe session, I got to know Peter, Lance, Eric, and Jeff from, Maine, Georgia, Arizona, and Texas. We talked about our glamping operations and how we set up, taxes and finances and assets. The stuff on paper that's really important and saves us money if we do it right. Growth sometimes can overwhelm you, and you will grow as a glamping operator because there's demand for glamping. And particularly at end of year time or tax season, which is, you really should be thinking about this stuff. How should you draw up your businesses? Should you have more than one business? What's an LLC? What's a C Corp? What forms should you file with the IRS? What company partnerships do you have? Should you write contracts it can get complicated. But these are very good questions to ask, and this tribe session pulled a lot of answers together. So enjoy this 10-minute clip on tax strategies for glampers, part of the weekly Glamping Guy tribe sessions. I hope to see you for the next one, but for now, just enjoy. What I really want to talk about tonight are taxes. I shared this last week, Lance, with you, or Lance rather. That's my total revenue for the year, just glamping. And then so direct rent and OTA rent, extras, and then some sale of some assets. We did sell some container homes, and of course I just sold Big Red. Although doesn't account for Big Red. I just sold that. Write-offs are becoming really important to me because you can see the total tax burden down at the bottom is $94,000, and so I'm going to be paying $8,000, $10,000, $15,000 in taxes, and that kind of sucks. I don't like that. So I've nerded out in with this guy. Has anybody heard of Mark Kohler?
No.
Okay, he's a tax lawyer and consultant. He's a big YouTuber and stuff. He's got a whole bunch going on. But I'm reading one of his books, and I really, the more videos I watched of him, I thought, okay, this is how a glamping operation should be set up. I'm actually quite excited to share this with you because the more I'm studying it, the more I realize that I could have been doing this a long time ago, and things would have been really, really easier. So I'm going to share that with you now. In fact, I'm going to stop sharing my screen. And I don't know and I would really like this conversation because if you guys know tax strategy better than very typically, I've always just filed a 1040 every year. I mean, that's just what I do. And I've always had my hunting buddy. His name is Phil, and he's been doing my taxes for years. And he's been great, and he does it for free, and it's been wonderful. And I had a publishing company that I sold 2 years ago. I'm going into my third year of payments from the guy who bought it. So I've got by the end of 2025, I had better got my glamping operation on the straight and narrow, because then that money is going to stop coming in. And then and all my little stuff that I got going on. Sometimes I teach. I've taught 3 years in the last 10 years and in the classroom. So I had some W-2 action going on and things like that. So that's what he's been taking care of me. But now I'm going to this new method. I actually I hired a new accountant on this, and I'm excited by how this goes, because the way he calls it, Mark calls it the trifecta. And he says it's really important to understand that if you're a small business owner and you're grinding it away, you're working hard and making money, but if you're not really
conscientious of the asset that you're building, you're just riding the hamster wheel. You're just working. And he says you really have to invest in the property. And this goes with what I've said in some of my videos. I talk about the Ray Kroc model. I don't know if Ray Kroc is the founder of McDonald's, and he discovered the franchise, and people would ask him, what kind of business are you in? You would think he's in the hamburger business. He would say, no, I'm in the real estate business. And quite honestly, when you're a glamping operator, you have operations, but you also have these assets. And that's really where the wealth is in the assets that you're building. There's a couple advantages to setting up your taxes correctly that do two things. One is it kind of separates the assets, it builds the wealth of the assets while you're working hard on your glamping operation, but then it also protects those assets. So he divides all of the income into two columns. Oh, here's someone else. Hi, standing tall. Let's see. All right, someone just jumped in. Hey, who just jumped in?
It's me. Sorry I'm late.
Oh, hey, me. How you doing?
Jeff, sorry. I forgot. You guys can't
Sorry,
see
Jeff.
that.
Okay.
Sorry about that.
Okay. No problem. We're talking about taxes. And I'm developing this chart of how taxes and how you arrange your finances and you get ready for taxes to protect your assets. And so here are, if you split your 1040 was what you end up paying, and from operations and assets, what you do is on each side you have companies. So you have an LLC on this side, have an LLC on this side. So you have two actual different companies. So an operations company and an assets company. And the assets is kind of easy. That's the easy one. That's that company, and I have a name for it already. It's called Rickenbacker Ranch. And what do you think that is? It's my property. It's my assets. I don't do a thing over there other than own that asset. I don't. I own it. I pay a mortgage on it. That's kind of there's only a few transactions every month on your asset side. Okay. Yeah. You don't need anything fancy. And then I have other assets in there. Like I mentioned, my business that I sold 2.5 years ago, I still have a note on there that's being paid every month. And so that's an asset. That's passive income. Okay. Everything over here is passive. Everything over here is work. You're actually operating the store. Now, I used to mix this up all the time when it came to my glamping operation. Actually, I had only one company. I had Monument Glamping. Okay, Monument Glamping was my company, and I had this property, and I had tents. I have my operations on the property, and I have a tracker, which is a UTV, and I have my cleaning supplies. I've got my home office here. I've got my storage room, and it's much of my basement right now. I've got a storage bin outside, so I've got all this stuff. Right, I'm running the company, but I'm running it on my private property. And what this concept does is it's actually, if let's say somebody falls over and heaven forbid dies or really gets injured or something like that on one of my tents or something, and they come after me. Well, they can come after my property too. They can come after everything I do on the property. They can come after me. They come after because it's all me. Now I do have some protection. It is an LLC, so I do have this corporate veil. But it's really not protecting my assets, because the asset of maybe my property is my personal property, but like my $15,000 UTV, all my venues, my $40,000 container home, and about my $10,000 tents and stuff. These are expensive assets. They could come after those assets. They're not protected. And maybe my land is mine, but that's still, I mean, it could be ugly litigation if you know what I mean. I now have two companies. Okay. And I'm going to show you he calls this a trifecta, and I'm going to show you my better drawing, but this is just for example's sake. I've got my operations over here, which is Monument Glamping, and then my assets is over here. That's Rickenbacker Ranch. That's my property. Now he says he gets even better. He says you should file your LLC as an S corp, okay, as an S corp rather than an LLC. I'm filing this year as an LLC. I talked to my accountant.
Which was it, the left one or the right one as S corp?
The assets. No,
Okay.
I'm sorry. Operations. Operations
S
is
corp.
the S corp, and the reason is because I'm going to start 2 W-2s and start paying myself the W-2. Now the reason is that this saves you money on taxes, because an LLC, and I've done this for years. I've always paid the 15.3% self-employment tax. I've been self-employed. I love being self-employed. I really hate having a job. I want to be on my own, and I just don't last very long in a W-2 job. So I enjoy entrepreneurship that much. So even though I know I'm paying more in taxes, I still like to pay the self-employment tax. Well, he says you don't have to pay as much, because if you pay yourself a W-2 and you pay your FICA through a W-2, so yeah, you kind of do payroll. I'm going to be doing payroll starting in January on myself. That's what I'm going to start doing. And so I'll pay my FICA tax quarterly and keep paying in. And then if it all shakes out in the end, instead of 15%, it'd be more like 8 or 9%. Which, with $100,000 in taxable income, that's going to be $7,000-8,000. That I'm not going to pay it in taxes now, just because of the way I'm setting this up. And so that's a big reason to do it this way. Okay. And so this is the way I'm setting up my company. So now I have this operations company, and then another thing I could do is all these write-offs. I already did this actually, but what I really get into now are write-offs, because now I have got, and I showed you that chart, I've got $94,000 in taxable income. I think that's what it's going to be. I'm still shaking that out, my spreadsheets and stuff. But by the end of 2024, it's going to be about that much. But now every single thing I spend, I'm writing off. I'm trying to figure out those write-offs. And the write-offs are all in the assets column. Over here, I get taxed. This is why I call it the trifecta. It all filters down into my 1040 any which way I cut it. You see what I mean? So I've got my operations company doing all my write-offs and my W-2s and trying to figure all that stuff. That's my real day-to-day business. Those are my lengthy ledgers. That's my QuickBooks that really figures everything out. My assets over here are simple spreadsheets that I figure out. But then this goes down, this gets filed in my 1040. Okay, so I got a Schedule C with my write-offs, my 1040, that's my living trust, you might say. Is this new to any of you, or is this like, just, do any of you really know this stuff? Like, oh yeah, Chris is talking this stuff. I've been doing this for years.
This is all new to me.
Okay, how about the rest of you guys? Because you guys all look like you're intelligent people.
Yeah, I like hearing you talk to it, Chris.
Okay.
One of the things I've been playing with an idea is if you hold those two corporations up there again, is you have the one on our left. I don't know which side it is for you. The operations.
Yep.
Pay rent to the LLC on the
right.
Yeah. And that's got favorable tax treatment.
Yep. He mentions that actually, because that's
the other thing is you got all those beautiful grandkids. You could put them on the payroll and put them in your marketing material and pay them and put it right in a Roth IRA for them.
Yep. So what you just mentioned, he does talk about that. He talks about the way you actually write an operations lease agreement. And he said, I know it's kind of, and I really like this guy because he says, I know it sounds weird because you're paying yourself, but really get an operations agreement written to yourself and write it all out. And that's exactly what I did. I could show it to you. Actually, I've got it written out, and we're going to file it in our corporate papers. and we're going to go back to it, remind ourselves what we were really paying. And I'm going to start paying a lease to the asset company. And not only for my land. So I'm thinking through like, okay, I'm going to pay a general lease for my land. And then I've got per unit operation. I'm going to have a lease for that. And then I'm going to have a payment for, I pay $300 a month for the UTV that we use to operate. And that's going to be an asset. So everything that's an asset, I'm putting over to the right side of that column. And then the left side of the column, it's a write-off when I just pay the lease. And then any money that asset makes filters down to my 1040, and that's how I get taxed.
Now, that was just 10 minutes of an entire hour of talking shop when it comes to glamping. The rest of the Glamping Guy tribe session delved into my actual trifecta that I created for my LLC and S-Corps. I also explained how this Glamping Guy stuff all fits into this greater business strategy of mine, as well as my old intellectual content and my teaching history and things like that. I've got a lot going on as a human being. But this tribe session wasn't all about me. It was about Eric and Peter and Lance and Jeff. We all had our glamping operations, our unique situations, and we got to share how the trifecta fit into each of our glamping operations and how we could manage our taxes and strategies and set things up properly. Because you know what? No matter where you are on your glamping journey, I think you could really get a lot out of our tribe sessions. Do you think you could contribute? And you're invited. So go to glampingguy.com/tribe and get signed up. Like I said, we meet mostly every week, and you're welcome to join us. I'm Chris Jeub, the Glamping Guy. I hope you learned something today. I help landowners develop safe, legal, and profitable glamping operations on their private property. We'll see you next time.